So let's begin with the top story. The US looking like the best house on the block.
If you look at the underlying economy,
the underlying economy is doing well.
US is not doing poorly.
Doing relatively well.
Looks reasonably stable.
The U.S. still has a growth momentum.
The economy had continued to grow.
Likely to grow.
Probably not as fast as we would like, but the back half of the year is going to be meaningfully better.
I see the U.S. economy in a really good place.
In good shape.
Pretty darn good. We think the U.S. economy is decelerating, but, nowhere close to a recession, just coming off the highs.
Joining me around the table to discuss is Michael Purves, Weeden Chief Global Strategist, Michael Schumacher, Wells Fargo Global Head of Rate Strategy, and Gina Martin-Adams, Bloomberg Intelligence Chief Equity Strategist. So, Gina, let's begin with you. Before we start to poo-poo this number just a little bit, I think we should reflect on the fact that 4 or 5 months ago, people thought this would be the first quarter of the beginning of a recession in the United States. It is better than expected.
It is, and if you sort of sift through all of the noise of trade and inventories and kind of get down to a final demand number, it's steady state of growth. Definitely a deceleration from where we were last year, but no form of, major deceleration that would suggest that we're imminently headed for a recession. And I do think that we still have our issues.
Yep.
Right, and that's evidenced in some of the spotty earnings releases that we've had this week. There definitely is an inventory excess that we've got to work our way through, very heavily concentrated in tech and industrial spaces specifically. But frankly, we're still growing. We're not in recession, and that's part of what the market bounce back has been all about.
Michael Purves?
Yeah, and just to add to that, one of the striking things about these prints is that how light the inflation came in, and it really underscores this notion of continued inflation-like growth, which is going to be, of course, very constructive for risk assets.
Mike?
Yeah, strong growth. You can't really dismiss that. 3.2, it blows away any number out there, so I think you've got to look at that and say it's pretty good.